Yeah, because it has always been argued that there's no way the CBN can actually achieve a low interest rate as well as having a stabilized exchange rate and, of course, low inflation rate. That's going to be a daunting task.
That is the nature of economic management. For every policy decision, there is a cost. What we need to worry about is the cost-benefit analysis. If you are in an economy where one of your greatest problems is how to stimulate economic growth, is how to create jobs, then you must be ready to trade off on some of these indicators. Because how else can you have the credit to drive the economy, if not through the financial system? Now you have a structure of the economy now that has created a situation where the economy has become like a heaven for hot money. Because you have a high interest rate regime in the economy, all sorts of hot money is coming into the economy. That in itself is not so good for the economy. What we need, more importantly, is FDI, foreign direct investments. People who will come here and invest either in factories, in agro-processing, refining, all sorts of things. But the preponderance of the investment we are having are portfolio investments. They are hot money. And that, again, is already even creating challenges of even of policy management. Because there are concerns now that, okay, if you tamper with interest rate, this hot money will exit, and it will create some shocks within the economy. But the earlier we begin to face the reality of what needs to be done in this economy, the better for us. If we need to trade off a little so that businesses can have cheaper credit, so that even the financial system and all these things, we invest less in government securities. Because the essence of banking is intermediation, financial intermediation. You mobilize funds from the surplus end of the economy to the deficit end of the economy. Not mobilizing funds from the surplus end and be giving it back to government. That is what investment in treasury bill is. That is what investment in bond is. So we need to build a financial system that will interface better with the economy itself. So if you reduce the attractiveness to invest in bonds, the attractiveness to invest in treasury bills, even if you leave all these other NPR liquidity ratios, if you leave that intact, it's still a step forward. Because if that window is narrowed, then the banks will be compelled to be more creative in interacting with the economy itself, in interacting with entrepreneurs, in also sharing the risk. Because entrepreneurship is about risk. If you now have a financial system that is completely averse to risk-taking, how can you now get the financial system to promote employment generation or to promote growth? It cannot work. So we must have a way to get the financial system to drive real development in the economy. And one of the best ways to do that is to reduce the incentive to invest in treasury bills, the incentive to, because if you put bonds at, say, 7%, for goodness sake, people will still invest in it. If you put treasury bills at 5 or 6%, we have people who are risk averse, they will still invest in it. Why move it to 11%? Why move it to 12%? At the time, bonds was even around 14, 15%. So we need to create an economy that rewards value creation. Those who are creating value in the economy are the entrepreneurs. We don't want a situation where the bulk of the resources in the economy will be going to fund the operations of government, most of which are recurrent spending anyway, not so much even investment in infrastructure. Look at how much we are spending to service debt. All these are dysfunctionalities within the system. And unless we begin to look at it, unless we appreciate better the pains that entrepreneurs are going through with the issue of credit, then there's no way we can move forward in terms of creating inclusiveness, in terms of creating jobs.
Now, taking you back, just before I take you on, some other issues as regards what Emefiele said, taking you back to the exchange rate issue. Before the CBN governor took over office, we saw the naira actually under pressure, and then of course the foreign reserve depleted to about $36 billion. And a lot of people, or a lot of economic analysts, were of the opinion that to shore up our reserve, what the CBN actually need to do is to perhaps adjust the naira band, and the earlier the better, because if you have to allow it, then it may probably lead to devaluation. I'm wondering, are you part of those who think devaluation is the best option? Or because he already says that that's not a line he wants to toe now.
Devaluation is not the best option. But again, your exchange rate should reflect the reality of your economy.
Which means it has to be adjusted.
It has to be adjusted. Maybe there's a fine line between adjustment and devaluation. But it may have to be adjusted. Because what we find now is that there is greater incentive for importation than for domestic production. That is the reality. There is a lot of incentive now for people to bring in hot money in the economy, take advantage of all these high interest rates and so on, and fly out of the economy with their funds without necessarily creating any significant value in the economy. So if we have to adjust, so be it. Because if you have a situation where you have this rapid depletion in reserves, what it simply means is that there's a lot of demand pressure on the foreign exchange market.
No, but does the CBN really have much to do in terms of shoring up this reserve when we know that we are import dependent?
We are import dependent. But for as long as you continue to overly protect the currency, you are encouraging more imports. That is it. We need to do more to support domestic production. That is the point I was making about creating a financial environment for domestic enterprises to thrive. And talking about the reserves, there are some other variables. I read his agenda, and one of the things he said was that about a third of our import bill is going into the importation of petroleum products.
Yeah.
That is a major pressure point on the foreign exchange market. And it is scandalous that as an oil-producing nation, up till now, we are still spending billions of dollars to import petroleum products. It's a major indictment on the entire governance process. Then there are issues of leakages. There are issues of oil theft. Because for goodness sake, oil price has been above $100 for quite a while. Oil output at least 1.52 million barrels per day. We have no reason to have the kind of reserve that we have. Something certainly is wrong within our domestic system.
Now, you talked about the CBN playing an active role, in the economic development.
Yeah.
Can they really achieve much without the fiscal side?
Well, there is very little that can be achieved. Whatever they can achieve within the monetary policy space. And one of the biggest ways that impact can be made is in the area of credit delivery to the sectors that can create the jobs that we need. But of course, there are other issues. Infrastructure issues cannot be fixed by monetary policy. Institutional issues, like the problems you have in the ports or with some of these regulatory agencies, cannot be fixed by monetary policy. Problem of corruption cannot be fixed by monetary policy. The general quality of governance cannot be fixed by monetary policy. And even the issue of fiscal deficit. Because if government continues to incur deficit in a way that it pumps a lot of liquidity in the system, it creates challenge also for monetary policy. So there has to be a very robust collaboration between the monetary authorities and the fiscal authorities for some of these objectives to be achieved. Because, I mean, it's really wide-ranging. It talked about agriculture.
Yeah.
It talked about industry manufacturing. It talked about the power sector. It talked about the health sector. It talked about oil and gas. You know, not much of this can actually be driven within the monetary policy space. So there has to be a very strong, collaboration between the monetary authorities and the fiscal authorities in order to deliver on some of these things.